I know times like this, you just take it slow. Fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 12th of May 2024. I'm going to be doing the weekly market review. So let's get started. Starting with DXY. Here we have the weekly time frame chart. You can see this is a very healthy walking inside the range or consolidation for DXY. We touched the bullish order block one more time, and we were very close from touching the weekly fair value gap high. And now I'm expecting price to just run up higher towards the buy side liquidity and this buy side liquidity. Going to the daily time frame chart, you can see how price run up higher, created a fair value gap, retraced, filled that fair value gap, made it efficient. You can see the body is respecting the fair value gap low and the fair value gap high, which is the candles low and the candles high. And from here, I'm expecting price to just run up higher towards the buy side liquidity. We have relative equal highs up there. So that's gonna be pretty much it for DXY. Going to ES, here I'm viewing the weekly time frame chart and I'm viewing the continuous contract. You can see pretty much ES is just retracing into this bearish order block. It has touched the mean threshold. You can go to your charts and you can measure the mean threshold. You see how price just traded to the mean threshold of that bearish order block. I'm still looking for low prices, although that this may feel that it's gonna be running the buy stops or the buy side liquidity. I'm still believing that I'm favoring lower prices at this time of the year because there are seasonal tendencies from the about second, third week of May going into June. There is a seasonal tendency to see a sell-off in the indices, and there's a saying that goes sell in May and go away. So there's a strong season tendency that has unfolded in the chart many times throughout the years. So you can go to your chart. This is not a panacea. This is something that is being unfolding in the charts over the years, and we consider them as roadmaps for our trading activities. So when you're approaching these times of the year, we'll be expecting some kind of sell-off in the indices. And this is what I'm expecting. I'm expecting just a rally of this a sucker plate just to induce any buyers into the marketplace to take their buys and just sell them. The smart money or the market makers are selling right now at the bearish order block. From here, we can see just a very strong displacement lower towards the sell side liquidity. I can be wrong, and this can just run towards the buy side liquidity, and there's nothing wrong with that based on my experience in the markets and based on what I can see and the intel that I have been given. I can bet on lower prices here, and this is gun to my head scenario. So you can see retracing to the bearish order block. Going to the daily time frame chart, you can see it has retraced to the inverted fair value gap. So you have this candle's high, this candle's low price. After it broke down lower, we can expect the inverted fair value gap to act as resistance to prevent price from breaking above it. So from here, I'm expecting price just to start breaking down lower towards the sell side liquidity. So this is gonna be pretty much it for ES. Going to NQ, here I'm viewing the weekly time frame chart and I'm viewing the continuous contract. You can see the same thing goes for NQ. I'm still aiming, and this my narrative is still bearish. I'm not gonna be switching my bias or my narrative just because price rallied away. It can rally away, but based on my experience, I'm still favoring lower prices. That's it. Going to the daily time frame chart, you can see prices walking inside the bearish order block. From here, it can just start breaking down lower, or as I've mentioned earlier, this can just rally up higher, displace to the upside, take out all the buy side liquidity, and I can be wrong with that. And there's nothing wrong with this. This is my opinion about the marketplace, and I'm gonna be walking with that in mind. So that's gonna be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see Dow has retraced to a weekly favor gap between this candle's low and this candle's high. The bodies, it has closed within the favor gap range. We have a bearish order block here. From here, we can expect price to just start breaking down lower. We formed the high, as you can see here. From the low, we took out the buy stops. So we broke above it. Many people who are retail trading it, they're gonna be thinking that, oh, this is a higher high, higher low, higher high. So now expecting lower, higher low. So they will be buying. But unfortunately, we sold off. We broke down lower below this low. So this makes people who bought here are now in stop loss. When we retrace back, they bought here, correct? So if we return back here, they will be in fear, they will be frightened from the marketplace. So they will be selling their positions at break even at this bearish breaker. So as a result of selling here, we can see a sell-off in the marketplace from here towards the sell side liquidity. So this is what I'm expecting for Dow. Going to the daily time frame chart, you can see price. This is a fair value gap and the bearish breaker. So the high of the fair value gap or this candle's low is a daily bearish breaker. As you can see, there's two lines here, the blue line and the black line. The black line represents the high of the fair value gap, the weekly fair value gap, and the blue line represents the daily bearish order block, bearish breaker, excuse me. And we have the bearish order block right there. This would be a high probability bearish order block. Why? Because we took the buy stops, as you can see, and we have a fair value gap inside of this. So this is a high probability bearish order block. Most times or most times than not, it will hold and it will show some rejections to the downside. So that's gonna be pretty much it for Dow. Going to EURUSD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see there's a very healthy retracement into the bearish order block. And this, by the way, this is a bearish order block on the daily time frame chart right there. But it's working inside this bearish order block. And from here we can expect price to just break down lower. Going to the daily time frame chart, you can see how price took out the buy side liquidity right there, broke down lower. So this fair value gap, buy stops taken. This is a high probability bearish order block, and you can see how price is just not be able to break above it. It's touching it. It's showing some damage through the wicks, but no closure whatsoever. So from here, I'm expecting lower prices towards the sell side liquidity right there, and this sell side liquidity. So this is gonna be pretty much it for EU, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see how price is just walking inside the bearish order block. From here, I'm expecting price to just start breaking down lower towards this sell side liquidity and this sell side liquidity. Going to the daily time frame chart, you can see how price, after it has reached the bearish order block right there, this is also a high probability bearish order block. Why? Because it took the buy stops, as you can see, and it has a fair value gap within its range. So high probability bearish order block. We traded to it right there, and we started breaking down lower, created a fair value gap. We retraced and reacted to the fair value gap and considered it as some resistance. We filled some of that fair value gap, and now I'm potentially expecting price to break down and run for this low. Like this would be my first low hanging fruit or partial. Then I'll be aiming for this fair value gap low and the consequent watchment, and later the sell side liquidity. This is how I'm looking at it right now. So this is gonna be pretty much it for pound USD. That was pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wa barakatuh.